Today, we're breaking down how high interest rates are affecting Spokane homebuyers and what you can do as a Spokane homebuyer to get ahead. Welcome back to Living in Spokane, Washington. If you're new here, my name's Hunter McKay, and I'm your real estate broker. With over 10 years of industry experience, I'm here to share all of my insights for you thinking about moving to Spokane. Let's dive into it. All right, so let's start with what are interest rates and why do they affect how much I have to pay for my home? For those of you who know what interest rates are, that might seem like a dumb question, but if you're not in this industry and you haven't learned what this is, then you don't know. And so in simplest terms, when you go to buy a house or any large thing really, car, boat, RV, you usually have to borrow money. And whoever is lending you that money, well, they already have the capital. So they're expending a risk on you, the borrower. That way you can go have that item that you want. And they're usually a business, a bank or a credit union, and they'd like to make some money. And so the big way that they make money is in that interest fee. They don't just want their money back, they want to make money on your money. And so every time you make a payment, you're paying partial to that sum of principal that you owe, but also to the interest that you owe them. And so for a lot of our older generation, our parents that got to buy houses in the 60s, 70s, and 80s, they might have suffered interest rates at 12, 13, 14, even 18%. Now, of course, their houses were a lot cheaper. If we had to buy a house at $600,000 at 18%, well, we'd be fucked. So now let's talk about why high interest rates have any impact on buyers and sellers. As a seller, a lot of people are watching this video thinking, well, this doesn't matter. I'm just going to go rent for a little while. I don't have to worry about this. Wrong. Your buyer's interest rate is the biggest really decider on how much money they can pay you. Let's assume that your home is actually worth $500,000, but the average buyer in your area can't afford a $500,000 home. It's going to take a really long time for your home to sell. And you might be thinking, well, what else can cause my buyer to afford my home besides interest rates? Well, they can get an increase in income. Their jobs can get better. But that takes a lot longer to happen. And so if you're thinking, well, what can happen over a 3 to 6 month period? It's usually your price can get cheaper or the interest rate can change. A lot of the time, buyers don't have a lot of control over their income. They're stuck for years at a time at a single income level or their double income for their family. And it's not something that they can just go out and fix. And so if the interest rate can go from 6.5% to 4% over a 1 to 2 year period, that can dramatically change the cost of a home. Let's take a look at the math. If we take a look at the median home price in Spokane, it's $425,000. Let's assume that a first-time home buyer is going to put 5% down. That's the minimum down on a conventional home loan. They're going to have around a $3,200 or $3,300 a month payment if the interest rate is 7%. If that interest rate drops to 6%, then that monthly payment goes down to $2,900. So it saves them almost $300 or $400 a month. That's a big deal for a lot of people. And sellers need to be aware that when interest rates are higher, your buyers have less money. And so you're likely going to be paying more in closing costs. A lot of your buyers right now especially are going to ask for seller contribution towards lender fees. And a lot of those contributions are going directly towards mortgage buy downs. That way they can afford the monthly payment. Because if their debt to income ratio is pushed too far, they'll get declined for the loan. And so a lot of buyers are pushing so far above their weight right now just to find something that's acceptable for their family that they're going to need seller contribution in order to get across the finish line. And sellers, if you're watching this video thinking, I don't want to pay someone to buy my house, okay, fine, then sit on market for a really long time and don't sell your house. You should contribute to buyers' closing costs if it is a victory for both parties and gets you closer to your bottom line. I have like 6 different videos about maybe you should get pre-approved, but really in this market, I super mean it. The amount of people that are like, oh no, I'm fine. I have 800 credit. I've got good income. I don't have a lot of debt. It'll be fine. It's not been fine for any of the people in the last 6 months who told me it would be fine. Yes, they bought a house, but it was a lot different experience than they thought, and it was a lot more stressful because once they found their dream home, then it was a lot more expensive than they thought it was going to be, and they had a lot more homework to do very quickly in order to secure the deal. Just go do the homework with the lender ahead of time. We're all scared, annoyed, frustrated to have to face our finances. We're not taught to do so from a young age. And so I'm just asking you, get over it, call the lender, do the pre-approval. It's a very short 20, 30-minute process, and he can help you do the work that you need to in order to be prepared to buy the home at the right price. If you're wondering, well, I don't know any good mortgage professionals, so I'm just going to put this piece of homework off. Wrong. You know me, and I know amazing mortgage professionals. So please pick up your phone, text my phone number at the bottom of this video, and just reach out. Let me know how I can help you, and I'm more than happy to get you connected to all of the different resources you need. Thanks for watching, and don't forget to drop a like and a comment, and follow us for more videos.